So what am I telling my clients right now? I'm telling them that everything is coming along really nicely. Earnings season is going to start to hit us, and I believe earnings are going to come in fairly strong. I do not believe the tariffs are going to be a major impact on the equity markets, and inflation numbers have come in pretty much in line with what people had expected. So I do believe that the rest of the year it's going to be kind of a Hakuna Matata, no worries for the rest of your life scenario. And I'm really looking forward to interest rates, either, not going higher or actually coming a little bit lower to stimulate the slower US and world economy. But that's what I'm telling my clients right now. Andrew, what are you telling your clients?
Yeah, we are really welcoming the two expected Fed rate cut that are coming for for remaining of the year. And echoing what you said is that we believe that growth will continue to be stabilized and the tariff impact is minimal.
Okay, Emile?
Well, as you know, I'm here on the equity side. We are going to do a second quarter preview today of Berkshire Hathaway, Boeing, and Mercado Libre. Three interesting companies for very different reasons. So look forward to using the IVoT Forecaster and doing a fundamental look at each of those companies.
Well, welcome to IVoT Eye on Investing, a discussion of the markets and investing from a long-term fundamental perspective, hosted weekly by IVoT Academy. I'm your host and personal financial manager, Ed Butowsky, and I'm proud to be joined by our esteemed IVoT market analyst, Andrew Tang, and IVoT founder and equity analyst, Emile Westergaard, who is a CFA, which, by the way, we go through that. That's a certified or chartered financial analyst, which is one of the toughest designations to get in any industry. So, Emile, I think we need to highlight that. Um, let's kick it off with financial manager's perspective. Andrew, what's your message to clients right now?
Yeah, right now we still believe what we're seeing is that inflation is tamed, is under control. 0.2, 0.3% on a monthly basis, these are normal moves. So just so that you know. So from May to June, we jumped from 2.4% on an annual basis to 2.7%. It is still in line with expectations, just like what you were saying. And as we come to a close from the last quarter to a new quarter, earnings season is kicking in, that's correct. And also, we expect to see productivity to increase among the businesses. So the positive expectation or the turnout is that the earnings for S&P 500 companies or publicly traded companies in general have been on the surprise upside. And as this AI boom continues and to march ahead, we see lots of supply and demand staying intact, inflation under control. The Federal Reserve is still expected to cut rates 2 times this year. And I truly believe that we are in the right position for the Fed to cut rates. And so when we put all this together, yes, like you said, we do see a benign picture for the US economy.
Do you,
Now,
do
yeah.
you believe that the mandate from the government for companies to be more transparent with earnings forecasts has helped there not be so many surprises?
Absolutely, because the USA has one of the toughest regulations in terms of the requirements for listed companies that trade publicly, right? When compared to other nations and all the ADRs, for foreign companies, they don't have the same re disclosure requirements or the filing requirements. And therefore, the picture is not as transparent, as more opaque, and that's where the risk comes in. So, that's exactly, the kind of transparency that enhances the ability to us to make better decisions when it comes to investing.
Yeah, and I'll just add to that that all of our financial tools at IVoT are based on that disclosure, right? So we build our tools using SEC filing data. We call that the real news source in the world. That's not through anyone's opinion filter. That's a legal filing of financially transparent data and the financial discussion by the companies, which is really where you're going to get the heart of what's going on in every industry and business. That's really the foundation of our whole approach to investing, is to use that information effectively, not depend on someone's opinion in the media.
Yeah, I've just noticed after being in this industry for 36 years that there's fewer real surprises and real shocks when earnings come out. And I think that has a lot to do with them being very transparent ahead of time.
Yeah. Yeah, that is for sure. And another topic that is talked about is this quarter growth for the nation. So we still believe that the disruption that we have seen in the first quarter turned out to be negative 0.5% for the first quarter for the nation's GDP growth. We believe the second quarter it's going to be more in the positive range versus the first quarter. So we don't believe that Q1 it's going to repeat itself in Q2. The imports have subsided and businesses are more back to normal. And in this particular case, we also believe that earnings is going to be neutral to positive. So therefore, it should lift all of the companies and resulting in a positive GDP Q2.
Well, that's a really nice forecast because a lot of people were thinking about a recession coming, and a recession is two negative sequential quarters of negative GDP growth, and a positive GDP growth would be a real nice thing to see.
Yeah, that is the surprise on the upside. That's the positive surprise as a result of the tariffs that are still in motion. So two things is that inflation is better than expected, and also growth is better than expected as a result of tariffs kicking in. And to, add a third to that is that the Treasury, for once have had a surplus, and that's showing up on our books right now for the United States. And so that really bodes well for the coming quarters or the remaining of the year.
So, Andrew, just yesterday it was announced that Trump is looking at some secondary tariffs on countries that do business with Russia to help them end the war. What do you think the impact of that's going to be if that comes to be?
Well, he's imposing 100% tariffs for countries that trades with Russia if Russia does not comply in 50 days. So these are really harsh deadlines, and again, designed to bring Putin to come to the table and seriously work on a peace deal instead of just saying it. So what the real intention of Putin is, nobody knows. But at the same time, it's evident that even Trump, had considered Putin as an ally, as a friend, frenemies, however you want to call it, that he's getting frustrated that the war is still going on. And it is a 180-degree turn from our impression of the president's take on this, on this issue. And now he is supporting, supplying Ukraine with, arming Ukraine with more weapons. And so Ukraine can defend itself.
Yeah, I think it's interesting that he's selling it to NATO, knowing that NATO is going to then turn around and give it to Ukraine. It's obvious that there's a dotted line back to the United States.
Absolutely. Yeah. It's better business for the US.
So,
It always blows my mind that Ukraine is the second largest by land mass country in Europe. You don't realize how big it is. And going back to what Trump is doing, I think he must be doing some work on the behind the scenes on the raw materials and all of the resources that Ukraine represents that I think the US would like to have access to. I mean, that seems to me a important card in this game that's being played.
it'd be interesting to know when the United States is supposed to go in and start extracting some of those rare earth minerals.
Yeah, I believe there are agreements and behind the scenes there are being drafted. That's absolutely one of the topics that it's going to be talked about. And again, keep in mind that rare earths elements are plentiful around the world. It's the processing that are rare, okay? Processing rare earth materials. Obviously, cost of labor is much cheaper in China versus the rest of the world. And speaking of China, Xi Jinping has been missing, for quite some time, in multiple events. And another topic that, I do talk about very often is that are there changes coming to China because Xi Jinping has been rumored to have suffered a stroke and his health is deteriorating. So many experts and analysts in the political field are speculating if there's going to be a changing of the guards in China's political party. And the result is remain to be seen.
What would
That's
that what would that mean for China from your perspective? Is there any kind of, I don't know, view or transparency at this point on what a transition of power might bring to the Chinese economy?
Well, most people are very idealistic about the positive change, or perhaps China can be more democratic, to pay more attention to human rights, et cetera, et cetera. But that shift is such a monumental shift, and nobody really knows, how is that going to bring about. So with the goings on with Xi Jinping right now, one can only speculate, what would the CCP, promote to be the next leader. But I doubt that the changes are going to be drastic. Yeah, that's only all people can really assume right now.
I'm actually going to Hong Kong August 14th, and I had been there 7 years ago. It'll be interesting to see what changes there are. I understand that it's not as vibrant and it's a lot more subdued as it was 7 years ago. So I think that the Communist Chinese Party has kind of spread and started to get into the um, uh, the democratic side of Hong Kong.
Yeah, that's been done a long time ago. Ever since the Umbrella Revolution in Hong Kong, that basically all democratic efforts to change Hong Kong, has been just basically put to end. And Hong Kong is an extension of Communist China right now and has been for many, many years. And so the immediate change that you will see when you go to August, when you go there in August, is that you're gonna start to see more and more people speak Mandarin versus the native Cantonese language. And that is one of the more evident things that I have seen, through videos and also through communications from people in Hong Kong.
Well, it looks like we lost Emile.
Yeah. Yeah, he might have some connectivity issues, and I think he will try to get back in. So, talking about China with Xi Jinping missing, the report of Xi Jinping suffering a stroke, it's quite credible. And then in one of the last meetings with one of the nation's global leader, he actually had to recite or look at his notes 16 times. So that is not like him at all. And then during the BRIC summit, he was missing. This is a big, big event where China is the leader in that organization, right? Because you're talking about Brazil's, Russia, India, and China, and then now many Middle East countries have also are participating. And so for China, for Xi Jinping to be missing and not showing up in this event, it is a big deal. So, more news are going to be released because so far these are not official news. So only one can speculate, what is going on in China. But it'll be interesting to see because usually China is very vocal, especially with Trump and with tariffs. But so far, they've been pretty quiet.
You wonder if they have an auto pen there.
Oh, I'm sure. Yeah, there are systems in place. There is a huge political event coming up, so um, we are keeping our eyes on this issue.
Yeah, and if you look at from the size of the economy, the United States still is so much bigger than China in terms of our trade. And the trade in China has come down. And this is a really important fact that people need to pay attention to is that China is shrinking. The United States is remaining pretty steady, and as a result, you're seeing a huge disparity between the two.
Yeah. China was still considered an emerging economy. So by definition, China it's still part of the emerging economies when it comes to comparing to developed economies. And in terms of population, they're number one right now, but India it's catching up actually pretty fast. China is the number two economy in the world. India, I believe, is the sixth largest economy in the world. So between China and India, it's really interesting to see, how the world economies will play out. But for sure, one thing that is hitting all countries, especially in the developed countries around the world, is the low birth rates. And China is not excluded from there. So when it comes to birth rates, India is much, much better, compared to China. And if you're looking at the Western economies, it is just a horrific number. We are not having enough children, So that's one thing that we also keep in mind. Like, watch out for India because birth rate counts.
Yeah, I would noticed a chart the other day with the number of people under 18 in Africa. And it's like 60% of the people in Africa and in all the different countries it was listed. But it showed that over 60% of the people were under the age of 18,
Yeah, it's
which
great. It's a great demographic. You don't want your country to be full of older, non-productive people. I'm saying, I'm meaning they're in the workforce, right? They've worked hard. They're entitled to enjoy the rest of their life for sure. But missing young, productive workers, it's a big issue for ensuring your economy will be vibrant for years to come and generations to come.
so Emile, thanks for coming back.
Yeah, sorry, technical snafu there. Back. Yes.
So today we preview second quarter earnings for Berkshire Hathaway, Boeing, and Mercado Libre using
Right.
the company's IVoT Forecaster. So why don't you take us through that?
Yeah, sure. So just as a matter of context, again, we're long-term investors here, and we view fundamental investing as a great way to understand businesses, the industry, the markets. And so we're really talking about how to value these companies independent of the market and compare them to the value of the market itself. Now, just looking at the stocks, right? Let's start with Berkshire Hathaway. Over the last 5 years, Berkshire Hathaway's up 150%. That's 20% compounded. We target 10% compounded from our investments as a basic baseline. And so obviously 20% is twice that. So the last 5 years have been very good for Berkshire. This year, they're up 6% year to date, which is essentially in line with the market. The market's up 7, or the S&P's up 7% year to date as of today. That being said, Berkshire's down 12% since Buffett announced his official retirement date at the end of this year. So it's going to be interesting to see where things go from for Berkshire into the future now that Oracle's not there as the spokesperson, as the leader. Let's go to the tool for Berkshire to start with here. And Berkshire right now, if I go to the tool, sorry, that's not the Berkshire tool. Let me pull it up
And
here.
you might mention that this tool is part of the IVoT Academy that you can sign up for, and we'll give you more
Right.
information of
So
that.
this is a core product of IVoT Academy, the IVoT platform. We train you in how to do the analysis using this tool. And this tool actually has a number of levels. For this show, we only do level 1, but we go into level 2, and we can even go to level 3 analysis of companies with this tool. This is basically a tool that values every public company as a cash flow machine. And that's all companies are. Business is a cash flow machine. I don't care, as we say, if it's a, in this case, a fund of investments, if it's a, Tesla or Nike, they're all cash flow machines using different product or vehicles to generate cash. Obviously, for Berkshire, we know one of their primary cash flow vehicles is Geico. They are the owner outright of Geico Insurance, but they have a lot of other businesses, trains, other things. Now, to look at the tool, in the first quarter of 2025, the company generated 13 billion roughly of cash flow, down 13% from a year ago. We know that was based on insurance issues around storms and such in the United States, fires. And so viewed that lower cash flow somewhat one-time in nature. So it's going to be interesting to see how cash flow bounces back in the second quarter. You can see sales were relatively flat year over year in the first quarter, and operating margins were also gross profit was also relatively flat at basically 23.7% year over year. That led to a cash flow value in the first quarter of $430 million. $430 per share versus the current share price of $472. So in that sense, it's trading at a premium. But you can see a year ago, without those one-time kind of costs running through the system, they were at $477. So again, going to be important to see that they get back on cash flow growth. Also going to be interesting to see, this is a company with $526 billion in net cash. Now that includes a lot of equities. They are professional investors underneath the hood. So a lot of what you own when you own Berkshire is their ability to invest in the markets. The markets have been on a tear really since the beginning of April, when the tariff thing blew up. So it'll be interesting to see if they were able to take advantage of that decrease in the markets to do some buying. Anyway, we'll see what happens and that they're reporting next Wednesday. So we'll get a new tool. Basically, what will happen is we update this tool as a cash flow diagnosis, you could say, every quarter. And so you'll get the second quarter tool next week. That'll be interesting. And we'll take a look at that in 2 weeks. We'll see what happened in the second quarter. In this case, you can also use the tool to forecast, just to show everyone how it works. Again, if we said, well, they're going to go back to 10% revenue growth and the margins are going to go down to, the costs are going to go down to 74%. They've been declining over time. That would give you a $558 and net present value. And then you're really also going to add in whatever they're returning on their core investments. That's a general way to look. Oh, and you can see SG&A popped in the quarter. So again, if we normalize SG&A back down to 5%, that would get you to like a $630 value. We don't forecast. I'm not making an advice. I'm just saying you can use this tool and study the company yourself to make your own forecast and decide whether you think Berkshire is an interesting investment. Okay, so that's Berkshire. Let's move on to the second name. We're going to also preview Boeing. So Boeing, unlike Berkshire's, had a tough 5 years. It's up 30% over the last 5 years, though I will note that all of that's happened this year. They were actually flat as of a couple of months ago, and then the stock's been on a tear since they bottomed out in early April. So 30% means they've been compounding at 5%, which would mean it's not been a good long-term investment over the last 5 years. If you look at kind of long-term investing in 5-year slugs, as an individual company, the company's underperformed. Year to date, it is up. Let me just pull that number. Year to date, it is up. I have it here. Let's see. Boeing's up 33% year to date and 67% since it bottomed out in April when the market kind of tanked. So they've had a big rebound over the last couple of months. Now, obviously from our perspective, we want to be observers of market moves. Obviously, when a market moves on a real fundamental change in the business, we want to assess that using our tools. But ultimately, our goal as investors is to have our own view of what the company's worth. So if we go now to the Boeing forecaster, we can say, let's again, same basic analysis. Hold on, popping here, Boeing. So again, Boeing's cash flow in the first quarter was $830 million. So they had a big pop in cash flow in the first quarter from a year ago. So that may be part of the reason why the stocks performed so well in the near term. And that's up from 320. Now the cash flow value, same math as we used for Berkshire, as we'll use in a minute for Mercado Libre, is $81 per share versus $230 as a stock price. So yeah, it's rebounded strongly, but in order to own these shares, you have to believe in very strong cash flow growth into the future. Now, part of that, as we know, and if you can go back, if you're an IVoTer here, you like our show, go back and watch the Boeing show about a month ago. We talked about this. They are making money in their government business, making government equipment. They're making money in their services, but they've been losing money in their consumer business. So the real key for them is to turn around that consumer business over the next couple of years. That gets to both orders around the globe, that gets somewhat to, travel in itself. We can talk about that. I'm going to try to finish up here so we can discuss this a little bit. And then again, we're going to get a new set of numbers from Boeing on the 29th, I believe it is. So then we'll get a new tool. We'll see how the business moved sequentially on a cash flow basis. Again here, though, if they were to continue to grow sales at 18%, which is obviously very strong, and continue to bring their margins, let's say, down to 85%, that would get you close to where it's trading right now. So you'd actually have to believe, now that's a 3-year forecast. If you're watching the show, you can see that would be 18% compounded for 3 years. And over 3 years, they get the margins down to 85, or the spending on cost of goods down to 85%. That would be something you would study on our platform. We'd study, what the company's saying. We can do competitive modeling. We can also do an analysis below the hood of each of those different businesses we just talked about, consumer and government and services. And again, if consumer turns around, it's going to change the business profile pretty well here. So that's very important. And then I'll just move on to the third one. The third preview today is Mercado Libre. I know that's one of Ed's favorite stocks. Mercado Libre, if you don't know it, is essentially the Amazon of Latin America. They are throughout Latin America pretty much. I live in, as you all know, in Lima, Peru, and we use Mercado Libre pretty regularly to at least check pricing on items and to order at times pretty much anything you can imagine, everything from food to an electric guitar, So Mercado as a stock, actually like Berkshire, is up about 150% over the last 5 years. So about a 20% compounded. It's been a really good stock. It's actually up 30% plus year to date this year. So it's continued to be a strong holding for a long-term investing. And I guess the question here, and we can go to it in a minute, is what do we see long-term? If we pull up the tool, what is it worth right now on cash flow? What does the forecaster say? It's trading at 2,400 roughly per share. It's worth about 1,600 on cash flow. So you have to believe that sales growth and margins will continue to improve. In this case, sales in the first quarter increased 37%, and gross margin was essentially flat. However, I know that like Amazon, they have a lot of IT-based businesses, higher margin that they're pushing. So if you believe they can continue to grow at 35% sales, and they can, let's say, get costs down to 50% over the next 3 years, then you can get up to a $40,000 stock. So again, not telling you what's going to happen, and we can discuss that here in a minute. But these are 3 interesting companies, obviously for different reasons and very different ideas. But for someone looking for international exposure and interested in growth, again, the interesting part of this tool, as Ed has discussed, we use this tool to value the companies now, fundamentally, but then we can use this tool on a growth company to say, well, what does it need to grow to be interesting as an investor. Even if it looks expensive now, it could still be a great long-term investment. According to this tool, if trends continue, this could still be a really interesting company to own.
Well, that is fantastic analysis, Emile. And anybody who is watching this, you should rush out and join the IVoT Academy to gain access to this, because it's world class, and I love watching you go through that. Um, it's it's something that every investor has to remember. It's fundamental investing versus technical analysis. Technical analysis tells you when to buy something. Fundamental analysis tells you what to buy. And that's really the best way to look at this. So you have to do fundamental analysis to begin with to decide if you want to own something. And then technical analysis are all those charts and double shoulders and cup and handle and all those crazy chart patterns. But this is what investing is all about. It's the IVoT Forecaster. So thanks for doing that, Emile.
You're welcome. Well,
so in terms of Boeing, and you talked about the retail space, that has a lot to do with the competition for Boeing. And there's a lot of competitors, and there's some bad blood out there on Boeing. Boeing needs a PR agency to kind of readdress their image, because their image is one of planes falling apart now. And I think people are steering away from that. What are your thoughts on that, Andrew?
Yeah, I think people still have their image of a picture of the door getting blown out, and also the history of the 737 MAX, all these crashes, it's instilled in people's memory. So it's very difficult to break out of that. But luckily, many countries around the world, as a result of the April event in the White House, that they have committed lots of money to invest in the US, right? And that's part of the negotiation with the White House. And part of that negotiation, many countries and companies around the world have committed to spend money on building the AI infrastructure. That's really one. And the second most popular is buying planes. And so you see the Middle East, UAE, they have committed, large sums of money to buy commercial jets, for multiple uses. And for a US manufacturer of jets, it's really Boeing. It's really nobody else. Gulfstream is still a little bit smaller, on a smaller scale, but in terms of large scale commercial jets, it's really Boeing. Airbus is a European company. So that has helped quite a bit.
Well, I was gonna say, as a brand, we discussed this on the show, which again, watch the show on Boeing. I think we discussed a lot of interesting topics there. But I think, this is a company that you get on a plane. First of all, people are generally overly afraid of flying more than they should be. I mean, honestly, you should be much more afraid of getting in a car than you should be of getting on a plane. But people don't like, they get terrified when they get off the ground, when they hit vibrations, all that. And when Boeing is now like, there are all these articles over the last 10 years of them hiding deficiencies. Again, as you said, a lot of that with the MAX plane. But, that is a fundamental brand trust issue, which is very hard to overcome as a company that, where people put their lives literally going on vacation in this company's hands. And I was afraid, honestly, when all this started to come out, I started to get afraid to fly in a Boeing jet, because I felt like I didn't know, I didn't trust this company to actually, take care of the problems in their planes. They were actually hiding them and launching them with problems, which is honestly a bit terrifying. But, again, these things do tend to settle over time. And as you said, I also think, and again, I don't think we have time here to get into it, but it'd be a very interesting discussion. What does AI mean for Boeing? I mean, these are very complicated products. These are very complicated designs, and very complex business. I wonder what AI means for Boeing. I think in a way, every company we discuss on this show, ultimately we can kind of throw AI into the mix and say, what does that mean? Anyway, yeah.
Well, I think that we're up against the clock right now.
Yeah.
So thank you for watching IVoT Eye on Investing. Please subscribe to our YouTube channel and click on the link in the description to register for early access to the platform opening soon, which includes access to our powerful IVoT forecasters and fundamental investing training. Thank you very much, guys, for doing this, and we'll see you next week.
See you soon.